Hello and happy almost end of 2025. I wanted to take a few minutes to share some last-minute year-end planning tips, each designed to help you finish strong and start 2026 on the right foot. First, as we are in the season of giving, let's talk about gifts to both individuals and charities. Let's start with individuals. In 2025, the annual gift exclusion is $19,000. This is the amount that you can give to any individual, family member, friend, or foe with no tax consequences for you or the receiver of your generosity. Now let's move on to charity. There are more than a few ways to support your favorite local charity or national charity. The first one is simple, the gift of cash or check. It's as easy as writing a check or making a payment using your credit card. If you itemize your taxes, keep detailed records so you can claim the deduction for your generosity. If you don't itemize, you can still benefit from the above-the-line deduction for cash donations up to $1,000 for a single or $2,000 for married couples filing jointly. Just remember, you have to keep the records of this, either via a bank statement, canceled check, or receipt from the charity. Another option, in lieu of cash, is donating appreciated stock. Once you have held a stock for at least 1 year and a day, qualifying it as long-term, you can donate it at its current market value for a full charitable deduction, and you pay 0 capital gains taxes. Most charities have a brokerage account set up to receive stock transfers. You just have to ask for the instructions. Keep in mind that this type of transfer typically takes 1 to 2 business days, so please don't wait until December 30th to start the process. A similar strategy involves setting up a donor-advised fund or a GAF. You donate appreciated securities to the fund, and then when you decide later how to distribute the money to the charities of your choice, pretty much the same rules apply to the holding periods and deductibility. The one difference is you can make a larger donation in a year that you have unusually high income to reduce your tax liability, and then gradually distribute the funds to your favorite charity or charities over a period of time. Now let's talk about retirement, or at least making some contributions for your retirement. If your company offers a 401k plan, are you enrolled and contributing? Have you maxed out your contributions this year? Have you taken advantage of the company match? It's essentially free money. This year, in 2025, the maximum contribution is $23,500. And if you're over age 50, like I am, you get to make an additional $7,500 catch-up for a total of $31,000. If you don't have a 401k plan, have you considered setting up your own retirement plan? If you have your own business, you could consider a SEP or a Uni 401k. Please call us for more details and we can help you choose the right plan. Another thing to consider when you contribute to a plan is the benefits of traditional versus a Roth. A simple way to look at this is whether you want to save some tax now or save taxes later when you withdraw the funds. In a traditional 401k plan, you save money on taxes now. The funds grow tax deferred, and when you retire and start withdrawing money, you pay tax on the withdrawal. With a Roth 401k plan, you have no tax savings today, but the funds grow tax-free and the withdrawals come out tax-free. I am not sure people fully appreciate the advantages of a Roth. If you'd like to explore this option or discuss converting your traditional IRA to a Roth for future tax-free benefits, feel free to reach out to us. On to the next topic, everyone's favorite, taxes. Don't forget to make an estimated payment by January 15th to avoid any interest or penalty when you pay your taxes on April 15th. And while it's the season of giving, it's also the season of taking, or shall I say, stealing your identity. Identity theft is running rampant, so be careful. Just as we teach our kids to look both ways before crossing the street and not to talk to strangers, let's practice online safety as well. Don't click on links that you are not 100% sure are legit. If it seems like a scam, it probably is. Be careful giving out too much information online. Cyber thieves today are getting smarter by the minute. It's up to you to stay safe and be careful. Set up dual factor authentication for the key apps that you check often, like your credit card and banking apps. I know it might seem like a pain to have to enter a second 4 to 6 digit code every time you log in, but take the extra 10 seconds. It's worth it. And pay attention to spam calls. Most credit card companies will not call you. They will send you an email. And if you're unsure, hang up and call the number on the back of the credit card. Don't worry about hanging up on someone and potentially insulting a stranger. Protecting yourself and your identity is way more important. As always, it's a pleasure to provide some useful advice. I wish you all a holiday season filled with happiness and family, and we look forward to what next year has in store for us.